You've mentioned that simply holding Bitcoin is enough, but would you ever consider building something like a Bitcoin bank, or does that go against your philosophy?
A bank is a regulated, or it's a reserved term in Western civilization. So right now it means a company that takes business or retail deposits. It's regulated. If you're a regulated bank, you might actually be prevented from doing other financial things. So we don't have any plans to be a bank. We're much more enthusiastic about pioneering the world of Bitcoin-backed credit instruments. We want to have, the premier Bitcoin-backed equity and Bitcoin-backed credit, and so it's a set of financial products, but not a bank.
Right, that makes sense. All right, Michael. A lot of people believe in diversification, but you've gone all in on Bitcoin. What gives you such strong conviction in that choice?
Well, Bitcoin's the only digital commodity, and if you're going to be a public company, then you need to be capitalized on a commodity. And Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset. Right?
Got it.
So Bitcoin works for a public company because it's higher performance than the S&P, and it's more volatile than the S&P, and it's a commodity, and so you can go to 100% leverage. And every mathematical model you can possibly work through indicates that the right answer is 100% Bitcoin. If you diversify that, all you're doing is bleeding off, diluting the volatility, which devalues the options. When you go from 100 vol to 40 vol, your options market would go from 100 billion to a billion. So you're going to destroy your own options market. And if you dilute the Bitcoin with anything else, you would destroy your performance. And so the first order answer is it makes no sense because the options are destroyed and the equity is destroyed. The second order answer is you can't build a Bitcoin-backed convertible bond or Bitcoin-backed convertible preferred stock or Bitcoin-backed fixed income preferred stock if you're not Bitcoin-backed, right? And so if Berkshire Hathaway, for example, were to buy $100 billion worth of Bitcoin tomorrow, they might have more Bitcoin than us, but they couldn't issue equity and credit instruments that have Bitcoin's performance because they would be diversified. And so at the end of the day, it makes sense for us to be 100% Bitcoin because it gives you the first order best result.
Absolutely. A lot of questions came in about MNAV. A lot of people curious about this. So do you think it's possible for MNAV to drop below 1 in a bear market? And if it does, how would that impact your strategy?
Yeah, I think an important point on that is sometimes I see like Twitter analysts saying, oh, this is just like GBTC and Grayscale went below 1 times NAV before. And what they miss is that Grayscale was a trust company, a closed-in trust, and we're an operating company. And a trust company doesn't have the option to refinance or take on leverage or to sell securities, buy securities, recapitalize, or buy their own stock back. And so when you should think of a trust company as it's just a form of corporate entity that has no operational flexibility to manage its capital structure. Operating companies have much more flexibility. We can buy stock, sell stock, recapitalize. We can take on debt to fix or to close a gap. So at the end of the day, I think that the one example people have in the crypto market, Grayscale trading below NAV, was because it was a trust, not an operating company. Theoretically, when an operating company or a company doing something trades below NAV, it's because the investors have lost faith in the management team, and they think the management team is destroying shareholder value by acting irrationally. So, for example, if I were to give myself $1 billion a year pay package and announce it, the stock would dive, and people would say, what if I just said, hey, I have $64 billion of Bitcoin, I'm going to pay myself $1 billion a year for the next 64 years. People would lose faith in the company. They would say the management team is looting the shareholders. They dump the stock would trade below NAV. It's because the management team is doing something out of alignment with the interest of the shareholders that the stock would trade below NAV. Now, having said all of that, we constructed the company so that the company can generate yield and generate gains even at NAV or below NAV. For example, we have $64 billion of Bitcoin. If the stock were to trade to $1 tomorrow, well, we wouldn't sell the equity, duh. We would just sell the preferred stock. We would be selling stock over collateralized 10-to-1 against Bitcoin with a 10% yield, and we would generate billions of dollars of gains selling the preferred or the fixed income instrument. At some point, people would say, wow, they're generating gains anyway, and then the value would come back into the equity. Or we would sell, you sell a preferred stock. If someone's stupid enough to short my stock to $1, I would sell $1 billion of the preferred and I would buy back the common stock, right? And I would just recapitalize the company, right? And then the common stock would fly through the roof, and then they would be complaining that we bought the thing that they were selling. So operating companies can do this. Trust companies, trust funds, ETFs, they can't do this. A closed-in trust can't do what I described. So the way that I see the world and the way that we see the world is when someone irrationally misprices something, then if it's mispriced too low, we buy it. And if it's priced at a massive premium, we might sell it, not to drive the price down, but just to capture the premium. And we construct all the preferred so that I sell this preferred that people want US dollar yield. I sell this preferred to people that want convertible. I sell this preferred to people that want Japanese yield. I'll sell this thing to someone that might want a euro yield. I will create this for people that want leverage. And ultimately, we're creating value. And if one of the securities trades weak, we either stop selling it or we reverse it and start buying it. And if you don't go to business school, then I'll boil it down to one sentence. Here's business school. Keep your options open, right? That's what you learn in business school. And how do you create value? You have to generate option value. So you'd say, well, why do you have that preferred and this preferred, and why do you do this some days and not do it other days? We're generating optionality. The more optionality we generate, the more opportunity we have. The Strife product. One day someone will start to talk about interest rates collapsing. Maybe there'll be someone writing a story about how the Federal Reserve is under pressure to lower interest rates, and SOFR will dive, or the forward interest rate curve will dive, and Strife will trade up. And it has nothing to do with Bitcoin. It has nothing to do with our equity. It has nothing to do with the MNAV. It has to do with people's opinion of whether or not Jerome Powell is going to change his something. And so we're creating optionality into the credit market. Like someone else will say, well, I think the S&P is going to start to provide a credit rating for Bitcoin companies like MSTR. And then the price of those things will readjust, and there'll be a huge surge of demand, and we will... If we have an ATM, when that surge of demand comes, we can sell $10 billion in a week. If we don't have an ATM and that surge of demand comes, we sell nothing in a week, and we talk to some bankers for 4 weeks, and then by the time we do something, the opportunity is lost. So the thing that makes our company a monster is having multiple ATMs in multiple capital markets, all of them correlated to different forecast, like your forecast of interest rates, your forecast of Bitcoin volatility, your forecast of Bitcoin itself, your forecast of crypto policy, all of those futures are changing all the time. We're straddling that future, and we're able to either buy or sell or hedge any of them in real time, 1 million, 10 million, 100 million, or 1 billion, right? And sometimes you do nothing for you could do nothing for a month or 2 months, and then you could do $2 billion in 2 hours, right? So, and maybe you'll do something, consistently, but we built the business to straddle the crypto economy and the traditional finance economy, and to monetize volatility, and we're pretty thoughtful about how we do it. So, and this is the joke. If you're a closed-end trust and you trade below NAV, that's death. If you're an operating company and we trade below NAV, we just get to monetize that. That's good for me, right? I mean, arguably, the more irrational the market it is, the better it is. If you were to short our stock down to 10% of NAV, we would make billions and billions of dollars a day, right? And so we have a very anti-fragile structure, and I think we're pretty optimistic about the prospects there, because I'm quite sure the market will stay volatile.